Wednesday means Mike Giordano with Williams Wealth Management is here for Mike on the Money. Now, it has been an interesting week in the markets. The Federal Reserve talking interest rates and the market sell-off with that Chinese AI. Mm-hmm. Tell us more.
Yeah. So, I mean, the Federal Reserve, obviously, you just mentioned in the last segment that they made a little pause on interest rates. That was coming off of 3 straight meetings in which they'd cut a full percentage point. So this is kind of a big deal. I mean, they feel like they're in a place where they're in a more neutral stance. You know, the economy's not running too hot, it's not running too cold, so they feel like there's a good position, there's a good time to pause on those interest rates, at least for the time being.
Yeah. Now, Monday, there was a big drop in the market when a lot of people were wondering, has China caught up with us in the AI creation or surpassed us as a country in that? That led to a NASDAQ fell hard that day.
Yeah, I know. It's been wild because the market's been fueled off of the whole AI trade. And in that case on Monday, it went kind of the opposite way because here you've seen all these major tech companies in the U.S. spending hundreds of billions of dollars to try to have the greatest artificial large language model, right? And then you see this Chinese tech company that doesn't have the best, most advanced chips, and they use less than $6 million over just a couple of months, and they come up with a model that's almost the same. Yeah. And that took the markets by surprise a little bit. There's still a lot of parsing to try to figure out, like, you know, how exactly they do this, and is it really as big an advancement as they think?
Yeah, because we don't know where that money came from for it. So there's a lot of questions about that platform.
There's a whole lot of questions about it, but the big takeaway was, you know, if AI is supposed to cost a lot of money to build and require a ton of energy, right? Mm-hmm. And in this case, it looked like it wasn't a lot of money, and maybe it's not going to require as much energy, and so it just has people reevaluating their investment thesis.
How important is it to stay on top of the news and what is happening if you are an investor?
Well, it depends on what kind of investor you are. If you are somebody that is always trying to get outsized returns, you want to play in more new innovative spaces, then it probably pays, you need to pay more attention to it. If you're a long-term investor and you're like, I don't really have the time or the inclination to really get into this stuff, then you just want to have a diversified approach that is taking into consideration all different industries, different companies, different countries even, different asset classes, stocks, bonds, cash, all that kind of stuff. And in that case, you don't need to pay as much attention to it. It is important to look at it quarterly just so you have an idea of like, where's my money look like. But if you're more broadly invested, you don't need to get all dialed in on the day-to-day stuff.
So with this interest rate big question mark that's out there, what's going to happen with it? For people who may want to get a car or buy a house, do they wait? Do they hold off? Because we really don't know what's going to happen, especially now that there's a new administration.
That's right. And even Jay Powell said today, no one ever knows what's going to happen, right? I mean, somebody asked him about uncertainty, and the world's uncertain all the time. But yeah, if you're looking at it right here, the Fed, you know, they're pausing interest rates. It looks like the market's not expecting them to do much the rest of the year. Maybe one cut, potentially 2, but it looks like that's getting dialed back in. So from a saver, you still should be collecting the same kind of yield you've been collecting over the last few months on your savings accounts, money market accounts. If you're an investor, investors really care a lot about growth. Interest rates matter, but as long as the economy is holding up, that's an important factor for investors. And from a borrowing perspective, even though the Fed had cut rates, long-term rates had gone up. So anybody out there looking for a 30-year mortgage, car payments, all that kind of stuff, they were seeing those rates kind of floating up again, which was kind of putting pressure on it. So if you're in the market to buy a home, buy a car, any kind of large purchase, the first thing you want to do is see if the numbers pencil out with today's interest rate environment. Whatever rate you're going to get, can you make those numbers work? Don't try to buy into something thinking maybe I'll get a % or 2 lower in the future and I can just refinance.
Yeah, and I mean, if you need a home, you need a home.
Exactly.
You can always refi down the road if you need to, I guess. Yeah.
Yes, but just make sure those numbers work out today, though. That's important.
Absolutely. Mike, thank you very much for being here. Mike Giordano with Williams Wealth Management. Always great to see you.